Gold is trading at $4,131 while silver sits at 28.76. That gap is widening, not closing, and that does not happen without a resolution. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Gold is holding near 5,000 while silver is not moving. That divergence is building pressure. Let's get straight into it. Gold spot is currently 4,131.81. COMEX futures are 4,138.50. That spread is narrow. That matters. Silver is 28.76. No breakout. No confirmation. That is your starting point. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today. COMEX gold futures market. Gold futures are trading at 4,938.50. Spot gold is 4,931.81. The spread is under $7, effective today. This follows sustained upward movement in gold over recent sessions. The unusual detail is stability at elevated levels, not volatility. Stability. The timing is what deserves scrutiny, not the move itself. The timing. Gold is holding near a psychological ceiling. Silver is not following. Think about what that sequence actually means. One market is pricing strength, the other is not confirming it. Why is that divergence expanding now? The ones paying attention already know what to watch next. Before I show you the full data picture, consider this. The last time gold held near a major psychological level while silver lagged, the move resolved with violent silver expansion. That is not coincidence. That is a pattern. Now let's build the full picture because gold pricing does not exist in a vacuum. CME Group data shows gold futures at 4,138.50. Spot data from institutional feeds shows 4,131.81. That is a tight structure. Silver remains at 28.76 based on live spot pricing feeds. That gap is significant. Gold has moved aggressively higher over recent sessions. Silver has not matched that move. The comparison is clear. Gold is near historic highs. Silver is not even close to previous extremes. That divergence is expanding. The rate of divergence is not slowing. It is compounding. The data is doing the talking. The ones who were dismissed for watching gold-silver divergence are not being dismissed right now. And here is what makes that picture even harder to ignore. Gold futures are aligned with spot pricing. That signals orderly demand. Silver is not showing the same structure. At the same time, gold is holding near a major resistance level. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups take time. They do not resolve instantly. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not thinking about. A $5,000 gold level. That is not just a number. That is a global signal. Now, macro positioning, because this is no longer a backdrop, it is the primary variable. Gold holding near 5,000 signals, risk positioning. Silver lagging signals hesitation. The dollar relationship cannot be confirmed live here. But historically, gold holding strength implies macro demand. Silver requires both monetary and industrial demand. That dual role matters. If macro risk increases, gold moves first. Silver follows later. That is the historical pattern. Every time that sequence has appeared, gold leads and silver accelerates after. It has not been different yet. Markets are still pricing a partial risk environment. Look at gold stability and tell me what probability you assign to full risk repricing. When markets fully price macro stress, gold reprices higher first. Silver follows with higher volatility. That is the structure. Gold Western spot at 4,931.81. Silver at 28.76. No confirmed Shanghai premium available at this time. That matters. The absence of that data limits full structural confirmation. Short-term picture is simple. Gold is strong. Silver is lagging. Key level is 5,000 in gold. If gold holds above current levels, silver likely accelerates. If gold fails at resistance, silver likely drops faster. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what gold does tomorrow. Nobody can. If you think you know, good for you. Current environment is unclear at key resistance. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. Gold is approaching a major psychological resistance at 5,000. Silver is not confirming the move. Divergence can signal exhaustion. The bull case is equally real. Gold is holding near highs without rejection. Futures alignment shows stable demand. Silver lag creates catch-up potential. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything in this data points to one thing. Pressure is building between gold and silver pricing. The resolution is not optional. It is inevitable. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group, Federal Reserve data, official spot pricing feeds, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0, out.